Copart, online auction and vehicle remarketing service provider, announced their first quarter financial results of 2026 fiscal year. Company stock price has been trending downwards in the past year, but is it justified? To see how this business is doing, I will answer 4 questions in this video. How much money does the company make? What does it do with the money? Will the company make money in the future? How fair is the current price of the business? Let's start by answering how much money does the company make. As I mentioned, Copart is an online auction and vehicle remarketing service provider. Most of its business is done in the United States, but they have operations abroad too. Online auction services are the main contributor to company's revenue, accounting for about 85% of total. The rest is vehicle remarketing, which is basically buying used vehicles and reselling them. With that in mind, let's take a look at the numbers. For the trailing 12 months, Copart's revenue was $4.7 billion. Sales grew 6.7% year over year. Its net profit for those trailing 12 months was $1.6 billion, which equates to 34.2% net profit margin. Free cash flow to equity was $1.6 billion, with a margin of 35.2%. The company is operating on quite a big scale and is clearly very profitable, which leads us to the second question. What does the company do with the money? There are 6 main capital allocation possibilities, and great management should choose the ones that offer highest returns to the shareholders. Those 6 capital allocation opportunities are: reinvest the funds back into the business, pay down debt, buy back shares from the market, pay out dividends, make an acquisition, or save the cash and do nothing. First of all, let's focus on the quantifiable returns on capital allocation. If we look at the returns on invested capital, it tells us how much after-tax profit company generates from its core operations using its capital. Or in other words, how effective does Copart employ capital? For the past 12 months, this number was 15.6%, which is not bad, but higher long-term averages show that capital employment efficiency used to be higher. Secondly, we have a return on debt repaid, which is just an after-tax interest rate that the company has to pay for its debt. Repaying the debt equals to the gain of its annual cost. Copart has basically no debt, so the number is 0. Thirdly, it can save the cash and do nothing, which in our model means buying 52-week US Treasury bills, which currently yield around 3.6% annually. It's not that easy to quantify the benefits for other free uses of cash, but we'll check if company chose those methods. So, if we look at the available free cash flow to equity of the past 12 months, which was equal to $1.6 billion, we can see that close to 27% of it was reinvested back into the business. Company did not pay any dividends and did not repurchase any shares, and also did not make any meaningful acquisitions. They are hoarding cash, and currently sitting on an all-time high of $5.2 billion. I couldn't find any publicly announced plans for the use of it, and with that it takes us to the third question. Will the company make money in the future? Let's go back to the revenue graph. During the trailing 12 months, revenue grew 6.7%, but longer-term averages were much higher. 5-year growth is skewed by COVID, but 10-year average revenue growth was over 15% annually, so the current 6.7% is a clear sign of a slowing revenue. The biggest drag on revenue growth for the past 3 years has been vehicle sales segment, basically not growing at all. Vehicle sales accounted for 18% of total revenue 3 years ago. Now it's down to 15%, which means that services segment is responsible for growing the business. Copart managed to keep its gross profit margin stable for the past 10 years, which indicates great pricing control. We now like to see gross profit margin in decline. Operating margin was also pretty much stable in the past 10 years, which shows that operational costs are under control. Net profit margin has been expanding. This is likely to a growing amount of cash on hand, which company generates interest on. To sum it up, Copart is a good profitable business, but to get back to a faster growth, company needs to find a way to increase those vehicle sales or to expand its online auction operations. Both segments are profitable, but online auction is way more profitable. Since we got to know the business, the ultimate question remains: is the current price attractive? My estimation is that currently Copart is worth somewhere around $30 per share, but value calculation can be very subjective. Currently, the stock price is in a strong downward trend, partly for stagnating sales, partly for very high previous valuations. I would wait longer before catching this falling knife. I give Copart a bearish rating. But this is my personal opinion. If you have something to add, I would like to see your thoughts in the comment section below. Thanks for watching. If you found this analysis useful and if you're looking for more investment ideas, subscribe to my channel. I'm Maurimas and I will see you in the next one.